Hello everyone. This is the video for Thursday, December 5th, and we have another live video from Trader Jim. And in today's video, once again, the 85 level is discussed, and you can see it here, the solid blue line. And it was broken briefly there, and I suspect this was to run a lot of stops right here, because after this happened, the market came back up. There's some discussion in today's video about market structure, and I completely agree with this. Market structure, in its simplest definition, is whether or not the market is making higher highs or lower lows. And this can take place in the major, medium, or minor degree, meaning small, medium, and large time frames. So to truly get an idea of key levels, you need to be looking at the market in several time frames. In any case, there could be a lot of discussion about market structure, but it is a very valid concept, and I definitely agree with the idea of stops being decided based on market structure. Very good idea. Let's have a look at today's video.
December 5th, about an hour and a half, a bit less than an hour and a half before it opened. So as frustrating as yesterday was, I kept saying they didn't do anything wrong because they really were not trading below 82.85. Toward the end of the day yesterday, they did test 82.85 again. Let me just see if I can get there. It was this test of 82.85 toward the end of the day, and they bounced off of it. So again, that area was rejected. And again, from yesterday's video, if you remember, I said once they get through the 83.15, they should first stop be between 83.30 and 83.35. They got slightly higher here. And now we are retracing. I'm guessing they would retrace to 83.15. I am hoping we are done for now with 82.85. So I am still bullish. Definitely above 83.15 and even above 82.85. Still looking for 83.60. This does not count. This is too far. This 40 here does not satisfy the 60 in my eyes. I think they need to actually get to 60, and that's what I will be looking for. All right, we are about to open. Same exact templates from yesterday. And well, hoping for more action today than yesterday. Again, yesterday they did nothing wrong. They were just sluggish. But they kept above 85, 82.85. So I am still looking for 83.60 and higher. Right, open range filter on the NASDAQ. Pulling back, so again, avoiding long trade. Our trader is doing its job. Nice pullback. Here's the 15 and below. So they're selling pretty good, a bit surprising, but again, I think this is just temporary. I believe this is temporary. Let them test some lower numbers and then shoot up. The S&P is in a bearish higher time frame, so no long trades are going to be taken yet. So definitely no long trades yet. Again, the other trader is just doing an excellent job filtering the price action. Okay, so very quickly here, this is another account. I activated it once, the $500 target. It became clear to me that that 85 was just a spike of 85. I think they will firm up on 85. So it was first target, moving up. This one is filtered by a simple moving average. So when moving average went bullish, blue bars, it took a long trade. I think they just needed to drive everyone out. I don't think 85 on a larger time frame will fail. They're testing it, they're spiking it. Ultimately, I think it will hold. This is the premise for the whole day for me today. Now, the arbitrator, again, outstanding job on both of these templates from keeping me out of long positions. The S&P stayed bearish the whole time. Never, the higher time frame never went bullish so far. So this template has a trailing stop. So once first target was hit, stop went to break even plus a few ticks. And as price is going to go higher, it will trail the price. I forget by how many ticks. I guess by 10 ticks. Now, if they take out my stop, then another, well, they did take out my stop. So still on longs. So now to take another long, price must break the volatility stop. Blue bars must appear while the moving average is still bullish. If the moving average turns bearish, there will be no long trade. Okay, so indeed another long happened here, going on 10:30. First target again is just 20 ticks away. Looks like the S&P higher time frame went bullish now. So there should be an S&P long soon. Gotta keep an eye on that. Okay, so first target is hit again. On the second half again, plus a couple of ticks. Love to have a nice run up without keep getting with these just half positions being filled. Now we're trailing closer. Ooh, okay. So now just $100 away. And now another long. The 987 Hakinashi, which I also activated once we came to this 85 area, that confirmed a long trade. And this one is trading to contract with $1,000 target. This one's doing well. So I'm trying to do a few things at the same time, guys. I'm sorry if I'm skipping back and forth, but I am trying to show as much as I can. It's not easy. So the other trader just took a long. We had the green background on a higher time frame, blue bars. Now took a long trade. I like what the stop is. Ideally, I would like it to be maybe a couple of ticks lower, but I think it's going to be fine. So the 987 continues to do well. Of course, nothing on the NASDAQ with the open range filter, which is all the way up there. The S&P trade is doing well, and oh, hold on, let me drag it from the other monitor. Hold on. So this template, let me maybe squish it in a little bit. This one hits its target of 500. Let's show everything. $500 target. And computer clock and time and sales. Okay, so we have one account hitting its target. Took some heat, but stayed with it. S&P is doing well. Hakinashi is doing well, and this chart, maybe at this point, I'll just disable. This was definitely a much better short, which, you know, we were above 82, 85, so I just could not imagine shorting it, but it's fine. So no trade on this template. S&P is doing well on this template. One account hits its target, and the 987 with $1,000 target is doing well. I'm gonna have to step out for a few minutes. Be right back. Right, so it's the afternoon, a little past 1:30, 1:40 actually. So it doesn't look like I missed much. Still in the same trade on the 987. Yeah, not really much to say. Hoping to at least get filled on the first target, and then I'll just put my stop at break even. See what happens toward the end of the day. Yesterday, toward the end of the day, they sold off, so you know that's something to keep in mind. All right, we have a move higher, hoping to at least hit that first target. It's hard to tell on the Hakinashi bars. I'm actually looking at another chart, another monitor, because with the Hakinashi bars, just the way the bar is formed, it's hard to tell what the price is. But we are close. Oops. The time and sales, just so you can see that price indeed changes. You can also tell over here, price is changing. I think we're like a point and a half away from that first target. And here we go, finally, finally first target. My goodness, it is torture. All right, so I'm just gonna put this at break even. No reason to take a loss anymore. As a matter of fact, maybe I'll just bring it up. I put my stop here, this way, you know, at least try and get something out of this trade. Let's see how the S&P is doing. Yeah, doing okay here. Again, gonna put my stop at break even. It's getting late in the day. Maybe, there we go. Slightly below this tiny little swing over there. So while we watch this trade over here, I just wanted to respond to two absolutely brilliant, I think, comments in last night's video. And really, guys, I encourage you and gals, please comment, please press the like button. It really helps the channel, because the more people we get to watch the videos and the more communication there is, I think the stronger this community is going to get, and the more ideas all of us can get and all of us could benefit. But anyway, the comments from yesterday. So the first comment had to do with stops. If you remember in last night's video, I commented that I put my stops too tight for the kind of market activity we had. And so I just got chopped up and then the market went higher anyway. So I commented, well, I really should have I should have given more room. My stop should have been a bigger stop. I should have placed it lower to give the market a chance to breathe. So the comment was that a stop, it might be more effective if a stop is placed as opposed to just a number of ticks, a number of points, amount of money. Stop should be placed according to market structure, which is brilliant. I completely agree. Ideally, you want to put your stop at a point where you decide you are wrong, right? So for me, yesterday, it would have been trading below 82.85. So that's where my stop should have been. Would it have been a larger stop? Yes, it would have been a larger stop, but it would make more sense. Because as I said, if we're trading below 82.85, well, that's when I'm wrong and I want to be out anyway. And I would say not only stops should be based on market structure, targets should be based on market structure as well. But the whole point of these videos is to show how the auto trader trades. And as I always say, the auto trader does have its limits. It cannot see the bigger picture and make decisions based on that. But I don't need it to do that. That's what I'm here for. As I always say, the auto trader is not here to replace me. The auto trader is here to put my plan into action so that the executions are perfect and consistent. I don't revenge trade if I take a loss. The trade is structured. It follows certain principles. So that's what I need the auto trader for. I'm not looking for it to replace me. So I communicate my plan to the auto trader via a template. So if I'm bullish, like in this S&P trade, I was bullish and it went nowhere for the longest time, but the auto trader doesn't care. It doesn't care about time. So it will just stay in a trade until either a stop is hit or a target is hit or a time to get out is hit. So, in my template here, at 4 o'clock somewhere there, at 4 o'clock, it would get out because I cannot keep overnight positions with a funded account. So yes, I completely agree. Ideally, stops should be placed according to market structure, not according to a set number of ticks or money amount. So another comment, and by the way, if you don't want me to talk about your comment here, you can just say so in the comment area. The reason I do is because I think other people can benefit, and that is the whole point of this video, so we can all benefit. So one viewer said that he or she figured out a way how to get kind of the same levels as mine via a mathematical formula that I did not even understand. This is way above my pay grade, guys. I'm not a math person. I know one of our viewers is a physics PhD. I assure you I am not. But I would say this. Whatever works for you, whatever way you find to work with levels, it doesn't really matter. I mean, I have my own way, and you might figure out a different way, and Randy's using market profile and networks. So the way doesn't really matter. It just has to be something you are comfortable with. So if you figured out a way via some kind of a mathematical formula to get levels that are similar to mine, or maybe levels that are better than mine. Maybe you'll figure out a way that just can really nail certain levels and you can trade off of those levels. That's great. And you definitely don't need, my approach to figure out levels. I mean, I share what I can here, and as far as what numbers are important to me, how I get them, it's really not that important, because there are many ways, I'm sure, to get the same numbers. Yeah, right. So the best thing I can say is, whatever methodology you use, the most important thing to do is to back test it and then forward test it. Forward tested meaning in real time. Use the same account in real time and place trades based on that methodology. And the reason for that is because you have to be comfortable with it. You will never have full trust in your approach if you are not comfortable with it. And I think the only way to get comfortable with it is by back testing it and then forward testing it. And if I can just give some more advice, don't expect whatever you use to work 100% of the time. Obviously, I don't have to tell you how probability works, but if you find something that, let's say, works 70% of the time, as an example, right? It still means that 30% of the time it would not work, and you can have 3, 4, 5, 6 trades in a row that don't work out. And it's not because there was something wrong with your methodology. It's just the way probability works. Anyway, thanks for your comments. Excellent. I mean, really high caliber. I think one thing, we may not get many views on this channel, but I think the people who do watch are definitely a cut above, which is great. So continue to watch and like and comment, and if you ask a question, remember, I don't get notifications when you place a comment, so I only check today's and sometimes maybe the previous day's video to see if there are any new comments. But if you ask a question, let's say, and I don't answer it after a number of days, I always check the current day's video. So you can place a comment in the current day's video regarding, let's say, you place today's, you just say, on November 21st, for example, I asked, and whatever your question is, and I will try to the best of my ability to answer whatever the question is, or respond to a comment. I definitely would never ignore anyone. I'm very grateful for all of you watching and commenting, so I'm just trying to figure out now what to do with this trade. It's getting late in the day. Let's see where the Nashi trade is. It's pushing. So I'm pushing higher now. Let's trail it. Don't want to give anything back now. Maybe the same for the S&P trade. Trail it some more. Okay, so I found a way to look at both both trades here. A bit squished, but maybe like this is better. All right, so we have the 987, and we have the 6 Oparenko ES over here. Okay, well, they got my trail, but it's okay. All in all, Not too bad. The S&P is coming back as well. I don't know if I should just maybe get out of it now. It's getting late in the day. Yeah, I'll just get out. Well, it is getting late in the day, guys. I just gotta finish this up. Let me close this position. Not too bad. I mean, decent day today. Not great, but can only take what the market is willing to give. Thanks everyone, and hopefully see you tomorrow.